Overdrawn directors' loan accounts. Okay, so what is it? So essentially, that is where a director owes money to the company. Now, when you're a director of a limited company, generally speaking, there's three ways of taking money out personally from the company. One is wages, like an employee. Now, usually that's done by minimum wage. So you're taking out minimum wage every month and you get a pay slip and you pay and pay as you earn. Simple. The second way is by dividends. So you have the company makes a profit and then out of that profit you take your dividend. And then the third way you can take money out is by a loan. So it's your overdrawn director's loan account. Basically, the company loans you money, but it's exactly what it says. It's a loan. You owe that money back to the company. So those are, generally speaking, the three ways you can extract money from a limited company. Now, with the dividends that are mentioned, this is where some directors become a little bit unstuck and they don't realise that they've got a loan account, because to take dividends, the profit has to be there to support it. Okay, so if I can illustrate, there's a company that makes 50 grand profit. So profit is after your costs, expenses, your creditors, etc. Pure profit, and it makes 50 grand every year. So the director takes out dividends of 50 grand every year. And nothing changes for the director's personal situation. He continues to take that out, but the company's profit starts to drop. Okay. Now, what we then find is that the company made a profit of 30 grand, but the director had childcare, mortgage, etc. So it continued to take what he needed to, and he took out 50 grand. So what's happened is there's profit there of 30 grand, which supports 30 grand's worth of dividends, but he took out 50. So that extra 20 grand that's not covered by the profit falls to his loan account. Okay, I've been doing this for many years and it's happened frequently where a director has said, I've not got a loan account because I've never borrowed any money. I've only ever taken minimum wage and dividends. That's fine if the profits are there. But then when we looked into the profits, they weren't there and it's fallen into his loan account. And so it can catch you by surprise. Okay. It could also be, your loan account could also be from where you've put personal expenditure through the company and then that's added onto your loan account. So you need to make sure whether or not there's a loan account, i.e. whether or not you owe money to the company. Now, you can check with your accountant. Your accountant will be doing your accounts on an annual basis. They will know. But you might want something a bit more up to date, because usually the profits of your company drop before it goes into insolvency. So you need something up to date. So check your management accounts, check your accounting system, whether it's Sage, etc. Have a look at that. And if you're still unsure, have a look at your company, look at what you've taken out, okay? And you can speak to an insolvency practitioner and they'll also, like myself, and we'll be able to guide you on that. But you need to establish whether or not there's an overdrawn director's loan account. Now, if you're putting your company into liquidation, does it automatically get written off? Unfortunately, no, it doesn't. So it's like an asset of the company. It's like a vehicle. It's got to be realised for the benefit of the creditors. Okay, so it doesn't get automatically written off. But what happens if you can't afford to repay it? It could be that the dividends you've taken that aren't supported by profit, that have fallen into your loan account, or it's just money you've borrowed from the company, you've spent on a mortgage or on rent or childcare, and it's something that is just not there for you to repay it back. So you need to discuss it with your insolvency practitioner, okay? And I'd recommend that you do that before you enter into liquidation or any other insolvency procedure, because once the company goes into liquidation, you can't come out of it because you don't like the fact that they're looking into the loan account. So make sure that you're open and transparent with your insolvency practitioner, and we then look into whether or not you can afford to repay it. Because it could be that you're in rented accommodation, so you don't have any asset that you can sell, or that if you do own a property, but there's little to no equity, you know, then you've not got anything that you can sell to repay that loan account. And in that case, you just need to demonstrate that to the insolvency practitioner. So if you're in rented, obviously a copy of your rental agreement, or if you're in a property, a valuation, up-to-date valuation, a copy of your mortgage statement will quickly illustrate that there's no equity there, or there's little equity. And also don't forget, if you own it jointly with someone, they own half of that equity as well. Okay, so that shows that you don't have any assets to sell to repay your loan account. But what about if you were to repay it on a monthly basis? You might be in full-time employment and you've got spare cash. Well, then you should be making a contribution towards your overdrawn loan account to the insolvency practitioner, to the liquidator, every month. But what happens if you don't? And that's quite common, because if you think about it, you've been a director of a limited company and that's now gone. So you might be struggling to find work because things are difficult out there, or you are in employment, but your outgoings more or less are the same as what you're bringing in, which is obviously very common. If that's the case, you need to just demonstrate that to your insolvency practitioner. So copies of your personal bank statements easily do it. So that will show any wages that are coming in, or showing nothing's coming in, and then your outgoings. And then as long as there's no luxury items on there, it will demonstrate that you can't sell anything to repay it and you can't afford a monthly repayment plan. But you need to be able to demonstrate that to the insolvency practitioner. But what I would say is, if you're looking to liquidate, or you want some insolvency advice and you're very worried about the overdrawn loan account position, pick up the phone to me. We'll have a chat and we'll run through it with you. And it's always best to do it right at the beginning so that you know what the strategy is and whether or not you want to continue. Okay, so I hope that's given you more information about what an overdrawn loan account is and how they can become due, and then how they're dealt with. Okay, thank you.